Welcome back. South African consumers' debt relative to their income has continued to increase during the lockdown. The latest Debtbusters Debt Index shows that high-income earners are under significant debt pressure. For more on this, we're now joined by Benay Sager, Chief Operating Officer at Debtbusters. Thanks very much for joining us. So clients who come to you have already acknowledged that they need help and taken the proactive step to seek debt counselling, but millions more South Africans haven't taken that all-important step yet. What's the danger of leaving debt counselling too late in the current economic climate created by COVID-19?
Yeah, that's an excellent question, and I think one that often people overlook. So debt counselling is put in the National Credit Act to help consumers who are about to become financially distressed. So they don't have to be financially distressed, but if they know that they're going to hit a roadblock coming up, it's important that they seek it. And the reason why they should actually not leave it too late is because it's important for making sure that you retain your assets. If you leave it too late, it might be that if you're behind on your payments, and if you get a default, there might be judgments, there might be legal action against your assets, including your home or your car or other things. And it's really important to be proactive about this, as many millions of South African consumers need the help.
So what have you learned about the debt-to-income ratio of average South Africans from observing and analysing your clients' financial situation?
So at Debtbusters, we look at all the incoming classes every quarter, as we call them. And what we've seen is a steady increase in terms of the average debt levels of the consumers compared to their income, but also compared to previous years. And on average, a typical consumer who would come to us needs to use about 62% of their net income, which is what they take home, to repay their debt. And as you can imagine, this is practically impossible for many consumers. Most of us, from our research, we know that we need about 2/3 of our net income for the necessities to pay for food, for transport, for rent, or for housing, or whatever else. So when you're left with a tiny amount to pay for your debt, and consumers have to use about 62% of their net income, that just becomes unsustainable for most of us. And I think that's kind of main finding that came out of the research.
So you've also found that higher income earners are getting into more debt as a way to maintain their lifestyles. I can imagine that many are thinking, well, once things get back to normal, I'll be in a position to pay back this debt. But considering the snowballing job losses and shrinking economy, is that realistic or sustainable?
I mean, we always say another loan is not the answer for a majority of the population. And we truly believe in that. What seems to have happened is that there has been a shift in terms of consumers' attitude towards taking out more loans. And I think that's probably driven by the fact that the real incomes for many of the consumers, from what we can see, hasn't increased. In fact, it's gone backwards in real terms, meaning that they have been below inflation for a majority of the consumers, and especially the highest earners. I think they've been more heavily hit. So they're finding themselves having to take out these loans to try to keep up with the payments that they need to make. Of course, in the long term, this is not the best strategy, but we also understand that for many consumers, that is the only viable option in the short term.
So this is also not a new situation. We have been seeing increased debt levels in South Africa over the last couple of years. But have you seen a spike in the number of people signing up for debt counselling that can be directly attributed to the economic effect of COVID-19 and lockdown?
So we've seen the impact of that in the last couple of months. I think in the first few months of April and May, everyone was trying to kind of figure out what's really happening, and most consumers were unsure about their financial situation and going forward. I think as things are becoming more clear, particularly from employer side, starting, I would say, about early July, we've definitely seen an increase in terms of the number of consumers seeking assistance from a financial perspective, but also those who are willing to take up the debt counselling option because they realize that that's probably the best option to try to restructure their debt in such a way that they can afford it.
Thank you very much for joining us this evening. That was Benay Sager, Chief Operating Officer at Debtbusters, giving us some insight into the indebtedness of the average South African.